Welcome to the daily update, where I'll go over the action in the market for Friday, October 24th, and we'll see how things look for Monday, October 27th. Well, we finally got a major economic report that came out, CPI, and the market treated that as friendly. So we gapped higher and went up during the session, set an all-time high with not only the S&P, but the Dow, the NASDAQ 100. And so things are positive in that regard. We're getting some mixed pictures under the surface, but we are positive. We're going to have to see if there's any conviction that can actually continue to come into the market. It's building now. We were looking good earlier in the week, and then we had that down day and kind of took the conviction away. Then Thursday and Friday, we started to build up some more. Now we'll see if we get any more carry through. The one caveat from Friday's session is that we were below average with volume. All right, so let's go back and talk about what happened. We had a gap higher open. Now, the futures were already positive. We were up about 1/3%, and then CPI came out. We got a little bit of a bump from that as well, and we climbed above R2. So we immediately were above R1. Didn't even come into play in Friday's session. We got above R2, 67.79, and we got up to 6,800. Looked like, okay, here's a round number. We'll see. Is that going to act as overhead resistance? And for a while, it looked like that. We held at the 6,800 level and then closed slightly below it. So that's kind of the psychological area. Now, if you watched yesterday's video, there's a newer indicator that we use about gamma exposure, and it was showing us that 6,800 was acting as overhead resistance. And it still seems to be doing that. We tried to get above it, but then ended up coming back down below it. Okay, so we were up 0.79%, still an increase less than a percent, but we were below average with volume. We're seeing an improvement with our technicals, especially with the moving averages, but we never have been negative over the last few sessions because of that. We've maintained price above the 20 period moving average. Interest rates did go up, but we're right at 4%. So overall, we've been declining, even though we ticked up on Friday. The dollar's been going up a little bit as well. And then, of course, all the geopolitical things. And mainly what the market is focused on is what's going to develop between the US and China with the trade war. And the president's getting set to go over to Asia. We'll see if that ends up bringing out some positive things as well. Okay, so some comments. The Dow, NASDAQ 100, and S&P all set new all-time highs, and it was a broad-based advance. Mega caps and tech did outperform. So this is one of those days where we see more strength from the stocks that typically drive the indexes higher. And then Wednesday was when the earnings came out, and we didn't really see things behaving all that positively. Well, Thursday, the reports were taking as positive. The same thing happened on Friday. And there's continued optimism over a potential trade deal between the US and China. So we're seeing a little bit of a buildup here with our list in the short term. The Williams percent R, which has been on the list now for the last two trading sessions, that shows positive short-term momentum. Then we have two new additions, the CCI 14 and 20. The stochastics always seems to be on the list when we're moving at all, but we are getting far away now from the 20 period moving average, and that's what the boom indicator measures. And we're also getting far away from the 50 period moving average, and it's not on this list, but we're watching how far we're getting from the 200-day moving average as well. So no changes to the overall scenario. Now the Fed's supposed to come out and have their meeting in the upcoming week and make their announcement. And it's pretty much gonna be that they're gonna cut rates. And then the market will be focused on what are they gonna say. And then the dollar was up, interest rates were up 4% with the 10-year yield. And sentiment, it's improving. Now you take the number by itself, yeah, that's negative. It's at 33, but it had climbed up from 28. And now we're looking more positive. We're seeing the green line crossing above the red line with our trend indicator, the ADX, but the ADX is still weakening. So we're below the moving average. And with the update, the bias is positive, momentum. I'm still keeping it mixed. Now, that could be positive, but once we go through the charts, I think you'll see that it's like you should have expected to see some of these charts do better than what we saw in Friday's session. And now when you look at the short term, we're dropping below 20. So we're not trending in that regard. Okay, so we did finally get to show some economic data here that actually came out from the government. CPI came in up 0.3%, less than the 0.4% that was expected. The market liked that. Last time we had the report, it was up 0.4%. Also, this is the big one. This is the inflation component. CPI, the core, came up 0.2%. They expected it to be up 0.3% as it was last time. And then I just have the numbers here. I have some charts for CPI to show you later on. But when we look at the global US manufacturing, the takeaway here is that we're above 50. We came in at 52.2. Above 50 shows expansion, and we came in at 52 last time. The services also above 50 and going up here, 55.2. Last time it was 54.2. And then consumer sentiment ticking down a bit here. You still got folks, I mean, all these crazy things going on. Yeah, people are going to be a little apprehensive right now. But the final reading came in at 53.6. They expected it to come in at 55, and that's what we had with the preliminary reading was 55. So it did tick down there. All right, so here is the CPI. Looking at this on a year-over-year basis, the blue line, this is the total CPI. It's going up, but it's still below that 4% level. Now, this is the headline number in and of itself. But then the core, that's the inflation component. And on a year-over-year basis, it's showing that it's declining on this chart. Then we look at services, which are coming down. That's the blue line. And we're starting to go sideways here with the core commodities. So the market like this. Here's the chart that I show where it does show us going up here on a 12-month rate of change chart, but actually ticking down on a month-over-month rate of change chart. That's what the headline number. And starting to roll over just a little bit with core CPI. That's what the market likes, that we're starting to come back down. Now, the Fed wants to get down to 2%. At least they do with the core PCE. And it would be nice if this was getting down closer to 2% as well, but we're just a little bit above the 3% level. And then the month over month change is declining as well. So when you look at all of this, the market liked that. Here's another way of looking at this. Headline and core CPI, they came in below expectations in September, both on a monthly basis and on an annualized basis. So these are pretty much the same charts that I just showed you, just gives you a little bit of a different look. And new home sales really shooting up here. So we've been range bound, but this saw a big improvement. That could be interest rates for the most part have been coming down lately. Not necessarily housing prices, but at least interest rates have been coming down. And then the 3-month average year over year is declining. So that's actually coming down just a little bit there. Then we look at consumer sentiment. That's the blue line coming in at 55. And then just to give it a little bit more context, this is the 2-year yield, which has also been coming down. And these two tend to move more in line with each other. Then breaking it out, the blue line, this is how people are feeling right now. We're seeing a decline there. And then the purple line, that's how people are feeling presently. The yellow line is how people are feeling looking down the road. And we're seeing declines with all of these readings. And then this is kind of what do we do because we're not getting any economic data. So this is an alternate jobless claims report. It said the initial claims, according to this, came in at 227,000, which is about where we were before. So we're still pretty much range bound, not really seeing a big uptick nor a downtick at the same time. Okay, then buyback aristocrats. Okay, that's kind of, I don't know why they call them that, but it's like there's different strategies that you can implement. And there are a lot of folks that, okay, I buy stocks for their dividends. Well, that has not really been performing as well as if you make your strategy, okay, if a company comes out and announces that they're going to buy back their own stock, then that's my strategy. I'm going to go in and buy some of that particular company. And this particular strategy has really outperformed. And this is compared to the equal weight. So this shows that it's outperforming. Down here, we're showing it a little bit underperforming. And foreign holdings and U.S. assets, we're just continuing to see it really going up. It's just foreign owned assets here. And then the world portfolio has delivered a real return. That's when you take inflation into account, near 4% going back all the way to World War II. All right. So this just gives you some historical statistics there. Gold ETF holdings at the highest in quite a while here. Yeah, well, people are chasing what's already been happening. Gold's been breaking out. There's a lot of insanity in the world. Inflation doesn't seem to be a real problem, which would be another reason why gold would be going up. The dollar's been going down, which has helped the gold markets to go up, but it's more of all this craziness going on. We want to be in something tangible, something physical that we can count on still having value no matter what crazy things are going on in the world. And then I'll be going over a similar chart to this in the weekly video. This is put out by FactSet. Just shows at this stage of the third quarter earnings season, the S&P is reporting strong results. Both the percentage of companies reporting positive earnings surprises and the magnitude of their surprises are above their 10-year averages. And that's why we're getting some support. Now, in the upcoming week, a lot of the real big names are going to be reporting. And we'll see if that positive result or positive reaction is what we see next week. Okay, and then companies are also avoiding mentions of negative macroeconomic headwinds on earnings calls. They're trying not to say anything. Well, we're worried about this, we're worried about that. It's actually going down a little bit here. Okay, so here's the chart. Not an awful lot of action once the market got open. We saw some of the strength developing before the CPI report came out, and then the market liked that. So we got a lot of the gains just from the gap, which is different than what we've been seeing lately. We haven't really been seeing big changes on a gap basis. We've been seeing most of the price action while the market is open. That was a little bit different in Friday's session. We quickly got above R2, and then we were hitting the 6,800 level. We tried to break above it and even stayed above it for a little while, but didn't see this massive upsurge once we broke through that level. And then we ended up dropping back down below 6,800 and closing a bit off of the highs, but pretty much still hanging on to all of the gains that were captured there. And as things shut down for the weekend, not too much here. You can see here the futures were already looking strong. Then the report came out. We got a bump from that, and then another bump as we opened in Friday's session. We're seeing pretty much the red line and the blue line equal with each other. We're starting to break out a little bit above this recent range that we've been in. We want the blue line above the red line, but the fact that they're both going up can be taken as positive. A bit of an improvement here, but just coming back into the bottom end of the range with S&P growth of value. End of day, growth was up more. It was up over 1%, where value was up about more than 0.5%. And it was up more for the mid caps and up less for the small caps. So, and this is strange. Well, you go back here and you're like, okay, it was up about half as much here, not quite. So how come this went up? These are different ways of measuring things, and they're all like if you look over here on the left, these are what the indexes that I use, and that's different from other indexes. And I do that on purpose so that we try to see using different ways of calculating things, are we getting confirmation in that? So we're seeing a bit of an improvement here. We're just coming back into the high end of the rainbow with small cap growth, not rainbow, above this recent range here with small cap growth to value and still above the 50-day moving average and going up a bit, but not really breaking out with mid cap growth to value. This is where we're languishing here. We're still below the 50-day moving average. We're still in a longer term uptrend, but going back to August, we've been underneath that 50-period moving average. We want this to get above the 50-day moving average and continue to go up to be more positive. This is looking positive, though. We're coming up out of the rainbow with this growth to value ratio. A little bit of improvement back up to the 50-day moving average with discretionary to staples and looking at that ratio there. So we're actually dropping below 20 in the short term. So we're not trending right now. And that's because of all this choppiness here. Now, we've got a bit of a gap from Friday. Are we going to try to come back on Monday and fill that gap? But that's one thing just to be aware of. But this is the first time since we had that big down day on October 10th that we've been able to break out of this range. We hadn't been able to get above the high or above the low from that range from October 10th. We finally got above that in Friday's session. So now next week we'll be saying, okay, are we going to continue to go up, or are we going to come back and fill the gap and then go back into this range? But on the bottom, we're below 20 with the ADX. That means we're not trending. We're also below the moving average. And you can see the blue, not blue, green is just barely above the red. You have to look at the numbers over here on the left to actually get that. They look like they're pretty much right on top of each other. Very similar reading here. We're still above 20, but we are declining with the ADX, with the green line just barely above the red line in the intermediate term. And we were below average with volume. So to have a CPI day, to have an up day, and to see volume pulling back, a little bit of a warning sign there. Here's the gamma exposure. We were watching 6,800 because we were getting a really high reading right here, and that was providing overhead resistance. We tried to get above that, but then weren't really able to climb above it. We're still back down below it now, so this could still be acting as overhead resistance according to the gamma exposure chart. And still above the moving average, even though the moving average is going down with this fear gauge. This is the Ultra Index, which is based on end of day data. Coming down with the VIX, dropping to the low end on a closing basis when we look at the moving average with the line chart, and also dropping a little bit below the moving average, but closing on the line with the bar chart. And not really sticking to seasonal norms here. We seem to have kind of deviated from that when we look at the VIX. And dropping below the moving average with the VIX of the VIX, both on a closing basis and with the bar chart. We're still up in this red area with the skew index, which is a variation of the VIX. The VIX uses at the money options to be calculated. The skew index uses out of the money options to be calculated. So we're not quite sure what big move is expected, but apparently Friday's move up wasn't enough to drop this down. So the market is still expecting more of a big move. And we decline, excuse me, we decline with this fear gauge. We also decline with this other fear gauge. So we're seeing confirmation there. We did drop off with the equity put call ratio daily chart. We're back to going down again, which is treated as positive on the 5-day chart. And we're starting to go back down with the 10-day chart, which is also seen as positive. Just haven't shown this in a while because it hasn't been moving around all that much. The large cap growth ETF setting a new all-time high. And we're seeing a bit more of a breakout here with the risk on to risk off ratio. When this is going up, the market is typically going up as well. And the high beta to low beta, we did see an improvement after Thursday. Now, after Friday, we're still going up and breaking out of this range that we've been in. So that should be taken as positive. And we're coming down just to the low end of the band here with the volatility risk premium as fear has been coming out of the market, which could also be taken as positive. Advanced decline line, not really setting a new high here. We didn't see an awful lot of strength this way. Pretty much flat based on price. We did see an improvement based on volume, but again, didn't set a new all-time high. In the bigger picture, we're still well above these advancing moving averages, and not much of a change with the advanced decline ratio here, but they are still positive. This did show an improvement. This is a 10-day simple moving average of the advanced minus the declines, and then posted here like an oscillator. And we are finally breaking out of this range that we'd been in, going back through most of the summer months. And we're back to looking positive with this smart money chart here. We're positive with accumulation distribution. We're above the moving average and going up with the boom indicator, which tries to measure the shorter term move of the indicator relation to the moving average. But we're declining Chaikin money flow. We dropped below average with volume. The Chaikin money flow picked that up. So the red line is just barely coming down, and we saw the histogram coming down. But the smart money indicator number 3 is still positive. We're above the moving average and going up. We saw a nice little breakout of the new highs because we're setting new highs with the S&P. We're going up with the 5-day chart, and we're starting to turn back up with the 10-day chart. This does show strengthening internals with the S&P, and just really choppy lately, but now we're back to positive with the vortex. The green line is above the red line. And some improvements with the advanced decline line studies, going up above the moving average with the NYC common stock, a little bit higher, but not showing a lot of conviction with the S&P. We did bounce above or going up above the moving average with the mid caps. We're finally coming back up to the moving average with the small caps. So look at those stocks inside the S&P above their 20-period moving averages. Just really didn't move all that much. To have the up day that we saw, didn't see much of a change in this indicator. We ticked up a little bit, more above 50 with the 50-period moving average study. We actually declined with the 100 moving average study and the 200 moving average study. So longer term, there wasn't a lot of improvement, but we did see minimal improvement according to these charts in the short term. So coming up here and setting a new all-time high, you notice how we hit this dashed line here. This is an overhead resistance level that's about where we topped out in Friday's session. So we'll see, can we maintain more of a higher high, higher low type of look and get through this overhead resistance area? Clearly in an uptrend, we're well above the 50-day moving average, but we did drop to below average with volume. So a little bit, this kind of sideways here with the 20 and a little bit of an improvement with the 50 and actually a little bit of a decline with the 200 moving average study on the S&P. Going above the midpoint, but not looking extreme yet, showing more solid positive short-term momentum with the Stochk RSI. But it is improving, where we are showing positive short-term momentum with the Williams% R. The CCI 14 chart is now looking extreme, as is the CCI 20. And we're getting extreme with the short-term stochastic. We're getting extreme and still going up with the intermediate short term. And we're starting to cross back above the line and looking positive with the long short term. And again, the reason why I say it like that is this is a subdivision of the short-term time frame. And looking more positive above the midpoint with the force index, seeing an improvement here with the short-term trend based on 20 periods. We're above the green line and the blue line here, so they are turning back up. We're well above now the 20-period simple and exponential moving averages, maybe even a little too far away. So the boom indicator is picking that up. That's what this measures here. What is price in relation to the 20, 50, and 200-day moving averages? Getting kind of far away. We're getting a reading above 100 here with the 20-period moving average study. We get a reading above 200 with the 50-period moving average study, and just improving but not looking extreme with the 200-day moving average. There's another chart that we look at that we're seeing. We're a little bit not really concerned, but we're just keeping an eye on that other chart that I'll show here. We're up into the +2 channel with the standard deviations chart. Now, intermediate term. Still not really showing a lot of conviction, but we are positive with the balance of power. We're positive with the go, no go. We're starting to get above the blue line. That's the highest high value. And the midpoint is going up as well. We continue to be in an uptrend with the Landry light and proper order. That has been in place since last spring. And a little bit of improvement. We're slightly positive here, but you can't really see it with the TTM squeeze. It's finally looking, with the reading of 13, it's looking a little bit more positive here, but we're still seeing these red dots, which could be treated as more negative. And improving, turning up a little bit, but still below zero with the ease of movement. We did see an improvement with the Arun. The green line went up, the red line's going down. That's the difference between the two is the oscillator. So this is turning positive where it actually had been turning a little bit more negative. And the McClellan oscillator actually declined. Here we are setting all-time highs, and this is going down. Now we're still positive since we're above zero. And when we're above zero, we're going up with the summation index based on price. Now, after Thursday, we were declining based on volume, but that has now turned back up. So both of these are going up now, and that's what we want to see. We did see an improvement with the NYSE McClellan oscillator, getting further above zero. So we're going up with the summation index based on price and volume here for the NYSE. But then when you look at something like this, we're actually declining with the Swindle Trading Oscillator based on price. And we were going up, but now we're flat with the Swindle Trading Oscillator based on volume. Trying to improve with the momentum here, but we haven't come back above the moving average. But we are looking better when we break it out based on price and not really showing a lot of strength here based on volume. And we saw that after Thursday too, where volume is lagging. It's like price is leading. In a more positive environment, you want to see it the other way around. You want to see volume leading price. So a bit of an improvement above 50 with the PMOs that are rising and still going up, but not very much here with the buy signals. And we're starting to very slowly turn back up with the PMOs that are above zero. Positive with the Elder's Impulse system, positive with the Parabolic SAR, pretty much flat to trying to turn back positive with the short-term slope oscillator, trying to cross above the moving average with the MACD. So the short-term oscillators are improving and just about ready to cross over positive where we're seeing some flat line but improvements here with the three intermediate term oscillators. We're still declining with the two long-term oscillators and improving but still negative with the Copic curve. And coming up and not quite into this dark green area yet with the Sean trend meter. If we go above this 90 level, that's when we start to look extreme with this indicator. We're still positive with the money flow as well as the ultimate oscillator and unbalanced volume. We're still positive with the intermediate and short-term RSI charts. We're going up with the bullish percent index. That's showing an improvement there. We did tick up with the NYSE bullish percent index and NASDAQ 100 bullish percent index. So from a point and figure chart standpoint, we did see some improvements there. Above the moving averages, and we're seeing the lines starting to go back up after they have been bunching with each other. This is more short term, according to the bow tie method there. Intermediate term trend. We finally were able to get back above the red line and the blue line, so now the lines are starting to go back up. That's helping the intermediate term trend looks more positive. Above all the plotted moving averages here. This is the distance from the 200-day simple moving average. We're now 11.58%. Again, there's no real set percent that we're watching. We just watch this when it gets above 10%. So you can see going back to 2023 and then a couple of times in 2024, when we had really high readings, that often led to more substantial declines. But we've been watching this now for quite some time and really haven't had much of a substantial decline. We've been able to stay above the 50-day moving averages there. And this is another way of looking at this, put out by Real Investment Advice. This is the index and then the deviation. Now, this is a 40-week moving average, which equates to a 200-day moving average. And this is a detrended way of measuring this, where they have us now getting up above this 10% level. So we're seeing pretty much the same thing here, but this is a longer term chart showing other times when we've had real extreme readings and then what happened after that. Mass index, we're waiting to see if we come back down and drop below the red dashed line. We're rolling over, but we haven't come down to that level yet. And this chart tries to indicate that there will be a reversal. We've been going up for the most part here, even though we've been range bound to generate this chart, the signals for this chart. So if this is predicting that there will be a reversal once we're finally down to this red dashed line, that would mean that this chart anticipates a reversal to the downside. But I wouldn't use that. I wouldn't bank everything on that because it doesn't always give really good signals there. Up 1.92% for the week. So another up week is looking good longer term there. So looking more positive with our trend charts here, with the Heiken Ashi looking positive, the Kegi chart is positive. We're actually turning back to positive finally with the Renko chart and starting to turn more positive with the three-line break. We set of enough of an upward move at the 6,800 level to draw in another green X here with the point and figure chart. And this is a triple top breakout that was generated in Friday's session. So this is picking up something positive as well. Long term, just actually declined a little bit with the 150 and 200 moving average studies there. And positive on all time frames across the different indexes, positive in the short and intermediate term with the dollar. And so tech, communication, these are the two big growth areas, and they ended up being up. Discretionary got hit though. It didn't have as good of a day, but we did see staples going down a little bit more there. But the two growth areas of tech and communication, we like that the financials are showing some improvement there. And all green here. Canada setting another new all-time high. We got above 6,700 with the S&P. And later on, we set another new all-time high there, and we got above 6,800 with the S&P. And then with the NASDAQ, 22.8, 22.9, and then got up to 23,000. The Dow sets a new all-time high. Energy, a BPI cross back above 50. NASDAQ all-time high. I mean, just pretty positive things. Tech sector back above 50. So when we see lots of green and dark green here, this is helping communication look better, even though Netflix continues to get hit pretty hard there. Tesla was down, but Amazon was up. But we look at Nvidia, Apple, and Microsoft. Microsoft wasn't up all that much, but this is really helping things. Saw a nice little bounce here from Oracle. We're a lot of red down here in the staples area, which is more defensive. And then the energy sector had been doing well, and there was likely some profit taking there. So the Dow getting above this R1 point. This is a level that I was keeping an eye on for Friday, it, seeing if we could close above that. We have. And so that's a positive improvement there. We're positive with the Elders Impulse system for the diamonds. Then this is looking at a different way, and where traditional Dow theory looks at the Dow and the transports. I also include utilities in that. This says, okay, instead of the Dow, that's not really representative of the U.S. economy. Let's use the S&P 500. Okay, setting an all-time high here. Instead of using the transport, so let's use the NASDAQ since that's tech. That's also setting a new all-time high here. Then we break this down. We're not setting a new all-time high yet with the equal weight. We're just a little bit underneath that here, but we are setting a new all-time high with the QQQ equal weight, which is the NASDAQ 100. So coming up, and we pretty much topped out at this R1 pivot point. So this is still acting as overhead resistance for the NASDAQ, but we are positive with the Elders Impulse system. We got a little bit above this R1 point here, and we're a little bit above it now. So that's positive in that we're getting above this pivot point currently. And we are positive with the QQQs, with the Elders Impulse system. We're finally starting to look a little more positive with the momentum for the NASDAQ 100. We're crossing above the moving average. Not an awful lot of conviction there, but it's at least trying to improve. And we did see a nice little move up, but we closed down below R1 with the S&P 600 small caps. And we were up 1.22% with the Russell 2000 small caps, but haven't been able to surpass these previous highs that were set not so long ago there. Positive with the Elders Impulse system for the small caps. Mid caps came right up to this R1 point, and that's where we set the high. You can see we had the open high, and we actually closed lower than the open with the mid caps. Not an awful lot of strength here, but it did gap up, and that's where a lot of the strength, in fact, pretty much all the strength, came from. So we're still positive with the Elders Impulse system, but see how we opened at the high and closed at the low for the bar? So there was some selling into strength there with the mid caps. And we are setting a new all-time high with the Wilshire 5000 and the total U.S. stock ETF. Financial sector improving, but not back up to its 50-day moving average, so we're still underperforming compared to the S&P. FANG index looks like we're just barely at a new all-time high. Not well, I guess we got an intraday high too, but these are the really big stocks, and when they do well, this index does well. So Amazon was up 1.41%, but still below its 50-day moving average. Up 1.25% with Apple. Microsoft up 0.59%. Google setting a new all-time high, up 2.7%. Coming back up to the 50-day moving average with Meta. Nvidia not setting an all-time high, but up 2.25% above its 50-day moving average. And Tesla was down 3.4%. And it's been pretty range bound lately here. Netflix starting to drop below its 200-day moving average. Guess they better get some better movies going there. Now we are setting a new all-time high with the SMH semiconductor ETF, 1.84% higher here. So that's looking a lot better. This is that same ETF, but showing it with the rainbow. We're setting a new all-time closing high here. Some ratios hadn't been showing these lately because we were just chopping around. When this is going down, that means the staple sector is underperforming tech. That's positive for the market. We have been coming down now over the last 2 days when we were up with the S&P. We're also back to declining with the staples to S&P ratio. So that's more positive for the market as well. Then just a glance here at U.S. to international stocks. So seeing a bit of a drop off here with the short-term correlation, still a pretty strong term correlation with the longer term. And coming back down below this resistance level here with the gold to SPY ratio. Now this is a weekly chart, so this is now official for the week since we've completed Friday's close. So is this gonna is this gonna put more pressure on, excuse me, is it? My goodness. Gotta love these take one videos. Okay, I'm gonna pause this here, folks. Okay, we'll see if this is any better now. And when I record these, it's very early in the morning my time, so it's not like I've had a lot of practice talking. to a lot of people here. So we are coming down with this. So this had been acting as overhead resistance in the past. It looked like we were breaking through here. Now we're starting to come back down. And then oil is starting to fall a little bit down into the low 60s. Maybe some profit taking there. It had a pretty good week. It was really starting to go up. Now it's coming back because we were into the 50s earlier in the week. And the dollar, not changing trend here, but still holding up now for the most part. And then we look at bonds. We came right back up to the 4% level with the 10-year yield. And we were up just a little bit here with the 10-year based on price. Now we're looking better again here with the Q's to S&P ratio. That's a growth to value ratio there. We're still not looking all that good. We're actually showing some weakness with discretionary to the S&P, but we're coming back above the moving average when we compare large cap growth to value. So we're a little bit above the moving average with the large caps, we're a little bit above with the mid caps, and we did see a nice little improvement with the small cap growth to value ratio there. Now, we still have some time here with the Hindenburg Ullman. If you need to read about this, here's some more of an explanation. We do not have a confirmation spike, but we have until November 7th for that to happen. Now, another thing to be watching for is we've actually now finished the time for the ZWAG NYC breadth thrust. But if you'll notice the date over here, it's the 23rd. We won't get the 24th chart until Monday's close. So there's a 1 day lag there. We're going to have to come all the way up to this red line. And who knows, we had a pretty solid day there, but maybe not enough to really come all the way up to the red line to generate a ZWAG NYSE breadth thrust. Not all that likely, but it was a positive day nonetheless. So if this doesn't look positive after Monday's session when this chart updates, I'll drop this off because now we've gone beyond the window for this indicator. All right, so what's the outlook then? During the week, Alphabet, which is Google, Amazon, Apple, Meta, Microsoft, they're going to be reporting earnings in the upcoming week, and these are all the big players, so they're going to have an impact there. We are positive on all time frames. Now, we're supposed to get durable goods. Who knows? But we're still dealing with the government shutdown and all the geopolitical things that are going on there. So here is a look at the what's supposed to be the economic reports calendar for the upcoming week. And they bumped some things out a little bit, changing some things around. We'll have to see. The big one is going to be the Fed. I don't know. Did they shut down? Okay, probably not. They're considered essential. Yeah. All right. So here's also a look. But again, this could vary a great deal depending on whether the government continues to be shut down or not. Seasonally, when we look at October 27th, we're neutral to negative with the Dow and NASDAQ. We are negative for the S&P, so not real positive seasonality there. We are finished now with the week after options expiration. So we've got the last week now of October that we will be fulfilling with Halloween coming on Friday. So we see a little bit of a positive tick up here with the post-election year. I follow the green dash line, and then we come down, and then we see a little bit of positive seasonality, but not an awful lot of conviction here when you look at the Stock Traders Almanac. And then this is ticking up a little bit here. This is put out by RenMac, showing that we're in a period of positive seasonality. And this is a newer chart, and this takes things out a little bit further. This is the S&P post-election years against 2025. And what they say is trend is more important than level. We've been pretty much going along with what has happened in the past when we compare 1950 up to the current time with post-election years. And this also bodes well for seasonality going into the end of the year. Also, second half of October tends to perform fairly well there. We are dropping down with the companies that are in blackout due to reporting earnings. So maybe some of them will come in and announce that they want to buy back their own stock. Now, we are just kind of giving a look ahead here to November. And no matter how you slice and dice it, we look positive for November. Now, this yellow area going back to 1950, positive. The past 20 years, blue, that's positive. Past 10 years have been showing where we've really been strong here for November. And then a post-election year, kind of the weakest, but it's still positive in and of itself. All right, so we still have the ease of movement which is below zero, and we're improving with the with the oscillators here and the Copic curve, but they haven't switched over positive. And we're getting a mixed picture now with the Swindle Trading Oscillator, and we have this unconfirmed Hindenburg omen, where if it gets confirmed, that's a negative thing. And then on the positive side, we're positive with accumulation distribution and the Chaikin oscillator, but we're negative now with the Chaikin money flow. And we're still looking pretty good here. We were getting a mixed signal after Thursday. We're going up now with the summation index based on price and volume for the S&P before, but they are positive. The parabolic SAR is positive, and longer term, as I keep saying this over and over and over, but it hasn't really changed. Longer term, the growth to value ratio is fine. It's short term, going back to August. That's where we're seeing more of this weakness. And we're seeing some weakness, but still looking positive with discretionary staples as well. The bullish percent indexes are positive. Money flow, ultimate oscillator, and vortex are positive. And the financial sector, but it continues to underperform the S&P. We finally can put the momentum for the NASDAQ 100 over on the positive side. Not showing a lot of conviction, but at least it's trying to turn positive there. And then our long-term special K oscillator as well. And then we'll see. This will come off the list one way or the other after Monday, once we get a confirmation either that happened or did not happen. Here are the pivot points from Monday's session. Okay, so our conclusion, haven't changed that. We're positive because we're above the 20-period moving average in the short term. We're above the 50-period moving average in the intermediate term. And we're more than 10% away from the 200-day moving average in the long term. But we are still positive. Thank you. I hope you have a wonderful weekend, and I will talk to you in the next video.